and welcome to Business Morning right here on Channels Television. It's the TGIF trade, and it's been quite the week for risk assets. I hope you managed to make some profit, but we're seeing oil still shining this week. Let's see what's happening today. This morning, oil prices rose as Middle East the conflict continues to stoke energy worries with both the U.S. and Iran seizing ships as the Strait of Hormuz stays shut. Earlier this morning, we did see Brent crude, $105, 92 cents a barrel, 0.86% higher. But earlier, there was a struggle to cross back above $100, but we've seen that's been broken. WTI crude, $96.36 a barrel, 0.53% higher. So it's still the same old issues this week, and even if it was a loss for both benchmarks last week, I guess we're regaining the profit this week. In other stories now, we see Africa's richest man, Aliko Dangote, has unveiled plans to build another 650,000 barrels per day refinery in East Africa, signaling an ambitious expansion of his refining footprint beyond Nigeria as the continent seeks to cut reliance on imported fuel. Mr. Dangote disclosed this during a presidential panel at the Africa We Build Summit organized by Africa Finance Corporation in Nairobi, saying his company is ready to replicate the scale and model of its Lagos-based refinery if governments in the region provide the needed support. We'll definitely be tracking that, but let's discuss the oil market price performance this week and other matters now. Joining me for this is Chinnan Dikwal, Vice Chair, Africa Energy Council, joins me via Zoom. Great to have you on the show. Well, good morning, Chinnan from Doha. So I think you have to unmute, though. I saw your mouth moving, but I couldn't hear you. But we're seeing oil prices, they're up, despite the ceasefire extension. What is the market really reacting to? Is it peace signals or lingering geopolitical risk?
Can you hear me?
Okay, I could hear you. I could hear you for a moment there, but I guess we'll try and get you back on. But we'll try it again, Chinnan. But
okay.
Oh, fantastic! I can hear you now. I can hear you now.
Oh, sorry, I apologize. Yeah, sorry for that system. Ladi. So it's I'm going to say to your point there that we have seen a bit of a yo-yo in the oil market the last few weeks, and unfortunately that has not changed at all. One moment we're risk on, the next moment we're risk off, and it's risk on and risk off, and that's been the situation for the last couple of weeks. I think what we're seeing between yesterday and today is that oil prices have gone up again, $106 per barrel right now as we speak. Last week it was actually down to approximately $98 per barrel. So it's it's going up and up and down. But I think the bulk of it really are the people are the markets are responding to the spot events that are happening on the ground in the Strait of Hormuz. We're seeing that the U.S. maintains its blockade of all Iranian assets going in, and that's causing a lot of traders to be rattled. The Iranians, of course, still holding the strait in chokehold. So that sort of quagmire is what we can see in the oil markets. But I think the welcome development here is that the ceasefire has been taken off indefinitely for now. We don't fully understand what that means exactly, but I think that's a good sign for dissipation of the conflict a tiny bit.
Oil price performance, that's for both benchmarks for this week. That's week to date. We still have the trade today, and things could change. We're seeing Brent futures, that's up about 18.63% week to date. WTI oil futures up 16.66% week to date. So whatever happens today, I don't think it's enough to drag the prices down to get a weekly loss, just like last week. So do you think markets believe the ceasefire is temporary? And how much uncertainty is being priced into Brent and WTI right now?
Yeah, a huge amount of uncertainty. 18% up on Brent. That's a very significant number. And we're talking about the futures price. So people are betting that a month from now, month and a half from now, the situation would even contract more. So, I mean, if you think about it, right, the ceasefire has been taken off, but the US strategy there is that of a chokehold. They're holding off any Iranian assets to use that as a pressure point to get them back to negotiate. And we have seen what the Iranians have been doing the last couple of months. They're very resilient and quite headstrong, and they're not getting back at all. So the question there, and I think this is the fundamental thing that many traders are baking in: how long would it take for all of the Iranian production to keep running? So if you think about all the oil that's being produced and going into storage, how long would it take before all of that oil fills up storage, and therefore there's no evacuation into international markets, if you see what I mean, and ultimately brings them back to negotiate? So I think that's sort of the calculation that many traders are having there. Would that be enough to get them to negotiate? Nobody's entirely sure. What mode of response would they have to that sort of chokehold is not entirely clear, and you can see that very clearly in the price of Brent and WTI.
Right. Even though we see uncertainty so far this week, do you expect some kind of surprise today?
Laddie, it's a difficult thing to answer because we get surprised, virtually every time. So right now we're talking about oil about $106 a barrel. It's very possible in the next couple of hours we could see a tweet or a truth, if you like, by President Donald Trump, about the converse to this situation, and you'd see the price coming down. We have seen this too many times. In fact, in one day last week we saw price go up and come down in a matter of 24 hours, in a very short space of time. So do we expect to see a surprise? Honestly, short term, possibly, but I think I align with the market sentiment. I think for the next month, it would be risk on, without a doubt, because you can see the strategy being deployed is that of, holding a bit of a chokehold to get them back to negotiate. And these guys are being really headstrong. We haven't seen that. So I am not super confident. I think the situation will prolong for the next couple of weeks, maybe months at a minimum. And then perhaps at that point, we could have something to happen. But certainly in the short term, anything can happen. I think short-term volatility. So, Laddie, I think the fundamental thing actually that many traders talk about is volatility is permanent. Volatility is the new normal. In the past, if we had, you've just shown me today, 18% on the price of on the futures price. If we had 5% up on the futures price in the past, it was something that was completely out of the ordinary. Today, volatility is permanent, is here to stay. So any countries, any companies, any traders have to bake that into the analysis. You have to find a way of baking that as a permanent structural change. This is not just noise. This is signal now. Volatility is signal. It's not noise anymore.
All right. So it was quite interesting, watching 2025, with gold prices, hitting new highs. Then we come into 2026 and oil is getting all of the attention. I'm wondering what's going to happen in 2027, at this point. But with oil prices surging on, geopolitical tensions, what are the, broader implications for inflation? We're already watching March inflation numbers, so far. Do you think going forward, we should expect shocks with inflation?
Without a doubt. So I'll say this, right? So, and if you ask me, for me, very fundamentally, the oil price and oil markets had a huge chunk of attention this year. But the real story that many people are missing is around gas. I think gas and agriculture. When you look at the Strait of Hormuz, there's been a chokehold. A lot of the focus has been on oil. Okay, its price has spiked. But gas and LNG is the biggest story that nobody is talking about right now, and the shortages. Even beyond that, I would say fertilizer, agriculture, is the biggest shock that we haven't yet experienced. So to your point, fertilizer, you're not going to see it in 26 because of all of the stockpiles and all of that. The real problem with fertilizer due to this disruption is going to happen in 2027 when the farming season comes and you realize that there's a big gap and a massive shortfall in terms of fertilizer supplies and all of that. So yes, you're 100% right. The short-term things that hit people right in the pocket, refined products, crude oil and all of that, we've seen and we've dwelt on it so much. Gas, I think there's been a little bit of focus on it, particularly in Europe, but not so much around the world. Fertilizer is the biggest blind spot. And in Africa, we are in real problems, I'd say, with regards to that. So do not forget, just in the Strait of Hormuz alone, most of those Gulf countries account for approximately 25 to 30% of global fertilizer production. Okay, so if you can think about that all of that supply has been constrained for the last, almost 2 months, certainly more than a month, then you can see that we are in for, quite a challenging farming season. I think this is the key thing for many people to bear in mind. But certainly from an inflation standpoint, I would expect to see that next year, yes, inflation doesn't go away. So don't forget, Ladi, you and I have had this conversation. Before the war, inflation started to taper down. Inflation was tapering. Now we saw the Federal Reserve come in, they cut rates a couple of times, making lots of adjustments into the economy and all of that stuff. All of that has gone off the window. With the tariffs that we've seen and disruption that tariffs have brought, and right now the disruption of the Iran war that we've just seen, I think, and we started to see it actually, inflation started to go back up, whether you're talking energy inflation, so, headline inflation, as it were, everything around it, core inflation, but headline inflation as well. I think that for the year 2027, a lot of central banks will be really fighting to keep prices, to taper inflation, for sure.
And because coming into 2026, in 2025, we're seeing the central bankers are getting quite comfortable. They're cutting of rates, but now they have to rethink that. I guess it's holds we're going to see for now. But let's flip over to investments now. Refinery investment. You see, Mr. Dangote wants to replicate the 650,000 barrel per day refinery in East Africa. How commercially viable is this? Given the challenges, already seen in Nigeria.
Yeah, this is without a doubt, I think, one of the, if you ask me, one of the genius moves that Dangote is here, no question about that. So I'll give context to that. Firstly, he made those statements, like you say, at the Africa We Build summit in Nairobi. It was a conference put together by the Africa Finance Corporation. Who was in attendance? One of the big wigs across Africa, the who is who of energy and capital and finance across Africa. So, and presidents as well. We had Yoweri Museveni of Uganda. We had President William Ruto, and several presidents all there in attendance. So it's a big conference. It's a big deal without a doubt. Of course, Dangote was there, and several other financiers and industrialists. Now, the key thing there is Dangote is making a huge pitch and a bet to the East African side of things, okay, the East African continent. They're saying, listen, if we look across Africa, the East Africa is one of the places with the lowest refinery capability. I can come in here and set something up to enable you become energy secure. So for context, we were saying all of that at the back of a report that was just released by AFC, which was termed the State of Africa Infrastructure Report. In that report, it made it very clear, it made it super clear that Africa imports approximately 70% of its refined products. So think about that. Huge endowments of oil and gas, but importing 70% of its refined products, petrol, diesel, kerosene, all of that, jet fuel, 70%. And if you look across West Africa, with Dangote coming in, much of the gaps in there, a lot of the gaps have been filled, not all of it, but certainly a lot of the gaps there have been filled. You go to North Africa, very secure, energy secure with Morocco and Algeria and Egypt, lots of refineries, very energy secure. You go to the south of Africa, deeply energy secure with the refineries in South Africa, Samref, all of those refineries there. East Africa has a huge gap. So when you look at that, and Dangote is making that pitch to say, listen, I can come and set it up. Uganda, Kenya, Tanzania, South Sudan, and all of those countries there, he is making the pitch that he can come and set up and create a huge amount of jobs, put value into the economy, and turn them energy secure. The pitch, Ladi, links back to what you and I have just been talking about. The Middle East is shut right now. The whole Strait of Hormuz, all of the refined, the refined products that are meant to hit Africa are not there. There's huge amount of desperation. It's a genius move. But to make that happen, Dangote would need policy alignment. It's not just to say, I'm going to just extrapolate what I've done in Lagos. It doesn't work. You can't extrapolate what you have in Nigeria into East Africa. There's a lot of uniqueness there. But the point he's making, which I agree with, is he needs policy alignment between the various countries. So Yoweri Museveni of Uganda, William Ruto, and all the other guys have to come together and give favorable terms and policy incentives for this to happen. But I think it's a clever move as well. He's proposing a 650 barrel per day capacity, very similar to Lagos. So ultimately, there's no need for redesign. A lot of risks in that project are known, and a lot of them sort of mitigated in lots of ways. It becomes just a thing of picking up from Lagos, technically, okay, plugging it, yes, in East Africa, but then putting all the uniqueness of East Africa around it. So it's a fantastic, a play by Dangote, for sure.
Right. How do you think, let's just imagine, he gets the refinery running in East Africa. How do you think he's going to handle pricing the products there, like fuel? Right now, Kenya pays the highest for fuel there, $1.60. Uganda, $1.46. The cheapest, I think, is Ethiopia with about 91 cents, according to recent data. And we're already, seeing youths already protesting in countries like Kenya about rising cost of living due to rising energy prices. How do you think he'll handle pricing in East Africa?
But Larry, isn't that exactly the need for the refinery? To your point, $1.60 per liter. Huge price, right? So if he comes very cleverly and pitches and shows that, listen, a refinery at your doorstep means that the refinery is right here. Transportation costs from Europe, let's assume, so think about it, a lot of the fuel in Kenya comes from the port of Rotterdam, or perhaps from the Middle East here. Think about the freight cost, think about the insurance cost, you layer all of this taxation, everything that comes in, before it hits the port of Mombasa. You've got a huge amount of cost, principally, that hits on it. So if you have a refinery right there at your doorstep, all of those costs go to zero. He's able to produce, he can show you a business case where, if your costs are $1.60 per liter today, I can probably deliver to you, fuel at the pump for maybe, I'm hypothesizing here, maybe $1.20, maybe $1.10. So that sort of business case is something that should turn any head. Then to your point around inflation and some of the pressures that we're seeing there in that economy, I can imagine that some of those can be alleviated. It's a super clever strategy. I think if you ask me, one of the biggest vulnerabilities of the plan would be, where would the crude oil come from? If you ask me, that's the biggest vulnerability. East Africa traditionally is the region with the lowest crude oil endowment in the whole of Africa. Kenya has a tiny bit, but it's not massive. South Sudan, you can argue, not massive again. And Uganda around the Kingfisher, Lake Albert, Kingfisher field around Lake Albert. And don't forget, Uganda is landlocked. Okay, yes, a bit of oil, crude oil, but then it has to be piped. I think they're building a pipeline from Uganda all the way through Kenya, running across Kenya to the port, around to the port of Mombasa, which is great for Dangote. Okay, but don't forget, the people building this, yes, I think it's Total and the Chinese, I think so, but they're doing that because they want to evacuate the international market. So the real problem there is that of crude oil supply. If he can lock that in, even if he doesn't lock it in, if he can without a doubt secure some from international markets like we've seen, but produce in-house, it would be a huge game changer. It is, it's hundreds of thousands of jobs that will be created. Right. It's a huge amount of, pressure that you take off their foreign reserve, the exchange rate. It's several things all in one. Like we have seen in Nigeria, and don't forget, Nigerian one, it's not perfect as yet, but we have certainly seen, what this one infrastructural investment has done to the country. Okay. Larry, can I just add? I know we're running out of time. If you look at the report actually that the IFC put out, it's a fantastic report because it says, I think in that report, that Africa has approximately $2 trillion, and I'm going to say that it's a big thing, right? $2 trillion in domestic institutional capital. $2 trillion. So what does that mean? It's saying that Africa has $2 trillion in things like pension funds and insurance assets and public development assets, in sovereign wealth funds, all of that pulled together. So if you think about $2 trillion, compare that to $1.7 trillion, which we've had in external financing the last few years. The last 10 years, we've had 1.7 trillion in external financing, but now we're identifying in Africa trillion in Africa. So it's not simply now a thing of we don't have the capital. Africa is realizing that we do have the capital domestically. It's a thing of finding a way of institutionalizing that capital and making it work into infrastructure. A lot of that capital today sits in, sort of bonds and government securities, so sort of low liquidity type investments. If we can repurpose, and I think that's what AFC is saying, if we can repurpose a lot of that capital and turn it into infrastructure capital, then even the fundraising to build those refineries can come from Africa. You don't have to go to international banks to borrow that capital at very exorbitant rates that almost make the project economics unbankable. Okay, you can find that capital now. So honestly, I think to summarize, the conference there in Kenya was super productive. I was meant to be there, I couldn't make it, but all of the points and the feedback that I got around the conference has been truly, truly outstanding.
Right. I guess Africa is sitting on a lot of money right now and funds. But before I let you go, I'm just imagining, the refinery is working in East Africa, is able to get crude oil, feedstock, and policy alignment is good there. Is it possible the fuel could get cheaper than Nigeria?
Good question. So it's difficult to answer that, but good question. So is it possible for it to get cheaper? I would say unlikely. I'm talking simply from an analysis standpoint, right, as an analyst. Very unlikely that it would get cheaper. So a couple of things. When you look at the fuel stack, so when I say the fuel stack, if you take 1 barrel of crude oil today, and you say, okay, 1 liter, for instance, they say, okay, a liter of oil, a liter of PMS, for instance, what's the total amount of that is the feedstock cost? Feedstock cost, i.e., buying crude oil to put in a refinery, is usually about between 65 to 70%. Okay, 65, 70%. Now, Ladi, you know that feedstock price, 60, 70%, that's traded on international markets. Nobody's going to sell to you. Today we just spoke about, we said $106 per barrel. Nobody's going to sell it to you at $100 per barrel because you're Nigerian. It doesn't work like that. It's business. So they will sell it to you, even if it's in naira, the equivalent of 106. Okay, so feedstock cost is a given. Where you might find the advantages are in things like labor costs that you have for people working on there and all of that sort of taxes, perhaps, how clever the tax system, policy alignment, is, and all of that. Things like, the remainder of the things that make up the cost stack, this is where you could find some of that efficiency. So let's say the 30%, but I doubt it, because bear in mind, Nigerian market's a very old market. There's huge amount of infrastructure that is in that market already. We have tank farms that have been built, are being run independently. We have pipelines that are being run. We have logistic networks. In those areas, the logistic networks and infrastructure is a lot more primary and rudimental. A lot of it doesn't exist. So you need to build that from scratch. Building that from scratch means that your total cost goes up, because those people building it would have to make money initially. So I don't think that could be cheaper than Nigeria. I would be very surprised. Actually, I do not think that's possible. Certainly in the first half of operation.
Okay. Well, we'll keep tracking it. We'll keep tracking pricing, and we'll see if it actually materializes right there in East Africa. Thank you so much, Chinnan Dikwal, Vice Chair, Africa Energy Council. Thank you for coming on today. Enjoy the weekend.
Pleasure. Thank you.
All right, let's get a quick check on how your money performed yesterday. We've seen Nigeria's equities market close on a positive note again, with the benchmark NGX All-Share Index rising 148 basis points, pushing the All-Share Index 222,000 points, never been seen before, and the market cap 143 trillion. The rally was largely driven by strong gains in heavyweights, including Boa Foods, Dangote Cement, Zenith Bank, reinforcing bullish sentiment right there in the market, despite a slight dip in trading volume there. But we see value turnover 38.12 billion naira, deals 53,062. To some telecom news now. We see the Nigeria's telecom sector is facing a dual reality now. Over 1,800 fiber optic cable cuts disrupted data services in the first quarter of 2026 alone. But amid these setbacks, operators are pushing ahead with upgrades, converting thousands of sites to 4G, with plans to roll out up to 10,000 new and improved sites before the end of the year. And now we see for other, top economic matters now, customer retention has emerged as the top business risk for 2026. And that's according to the Nigerian Economic Summit Group, highlighting growing pressure on firms, amid weak consumer purchasing power. The report underscores how declining demand, rising costs, and economic uncertainty are making it harder for businesses to keep customers. Take a listen.
It's the launch of the Nigeria Private Sector Outlook for 2026 with the theme, The Productivity Imperative for Nigeria Businesses, and it's organized by the Nigerian Economic Summit Group, the NESG.
Engage constructively with policymakers.
Newly appointed Coordinating Minister of the Economy and Minister of Finance, Mr. Taiwo Yedele, joins virtually for his keynote address, and is focusing on from reform to results, unlocking investment, productivity, and growth.
We are mindful that the next phase we are now entering is where reforms are tested based on the outcomes that they produce and the impact that they make. Because reforms on their own do not create growth. We need investment at scale to create decent jobs, enhance productivity, and improve living standards.
The NESG executives agree with the position of the minister, although their focus is more on the real sector.
The challenge for Nigerian businesses, therefore, is no longer limited to surviving macroeconomic instability. It is now about how they can compete effectively, scaling their operations, and sustaining profitability in a more complex and challenging environment. Moving from stabilization to productivity-led growth requires deliberate and strategic action at the firm level.
Overall, you can see the critical role of skills, supply chains, interruptions, and clients' retention has been very critical in driving these enterprise risks across all sectors in Nigeria. But if we want to make better sense of what we are saying now and try to combine them along the most important risks or factors that are driving the performance of businesses in Nigeria, we have identified what we call a new risk paradigm.
The NESG has also identified loss of customers and clients as the biggest risk facing the private sector this year, and warns that shifting demand patterns and weakening purchasing power are reshaping the business landscape.
Chairman and the AFDB representative. And Ogechi, please remain.
All right, to our next conversation. Nigeria's nightlife economy is often viewed through the lens of high-end clubs and celebrity culture, but a new report reveals a much deeper, more powerful story unfolding after dark. From roadside bars to food-led community hangouts, the sector is quietly processing over 900 billion naira in transactions, supporting tens of thousands of jobs, and reshaping how Nigerians spend, socialize, and even pay. I'm joining him now to unpack the report. Bemigho Awala is a public and media relations manager at Moniepoint Inc. to unpack what this means for businesses, policymakers, and investors. Great to have you on the show. Good morning.
Good morning. Thank you.
So, quite interesting reports there. The night economy. So we have a day economy. I guess that's where we are operating in. Then we have the night economy, and 900 billion naira has been processed. That was in 2025, I believe. Then we see most of the headline numbers there. About 1.2 million. That's for the cost of transactions there. We see a lot of transactions moving. We see also that billions are being made. A lot of people are passing through, that economy. Talk to me about, this report there. Processing over 900 billion naira annually, and it's still an underestimated, segment.
Yeah, pretty interesting report. I think that it's important to also understand the rationale for this. Most times we think about Dirty December, we think about the high-end clubs, across the big cities, Lagos, Port Harcourt, but especially you find people think about the community nightlife. All right, and because Moniepoint sits on this huge data trove, my colleagues on the content side decided to dive in, also against the backdrop of all of the dirty December frenzy, and said, look, let's look at what the numbers tell us. There's a deeper story that we feel that Nigerians should know, and so they dug in. And so this report is off the back of over 27,000 bars, lounges, and some of these community centers that leverage our platform to carry out transactions. They then further went on the field, just so that they could experience across the country, Lagos, Port Harcourt, Abuja, to see how the money moves at night. And the stories resonate because there's a sense of familiarity and trust that comes from those spaces. All right, people go to these spaces because there's a sense of the familiar for them. They feel that these spaces provide some level of trust, and they are ready to lean back and just have a good time. All right, and so you see that whole value chain from the people who serve. Someone carries your plate, someone places the order, someone finishes the transaction. It's someone guards the place. Someone is
then we have
music.
The boys on the streets that are telling you where to park.
Absolutely.
Parking.
Correct. Correct. So it's a really, really huge value chain, and we thought that look, the community nightlife deserves the same kind of attention that we pay to health, that we pay to agriculture, that we pay to retail. All right, and it was with this mind that we dove in and brought out this report for Nigerians to truly experience what community nightlife looks like in Nigeria.
Right, and it also shows that the nightlife operates two worlds. High-end clubs versus community bars. So I'm wondering which of these are actually driving value. But looking at the data still, if we look at the one that says what's driving spending, right there, surprisingly, alcohol is about 5%.
Correct.
Then food, you've tagged it the silent giant there.
Yeah.
Taking a chunk of what they're spending on.
Yeah.
So talk to me about
because a lot of people, especially in the north, do not take alcohol. All right, but because I was going to come to that to say that this study actually went around the country. We looked at also data points from the north. Where people relatively think that nothing happens in the north. I'm sorry to burst your bubble. Things actually go on in the north. The nightlife economy there peaks from around 8 p.m. and by 12 midnight, it dives down. Whereas in Lagos and Port Harcourt, from 11 to about 2 p.m., we see all of that, 2 a.m., 3 a.m., we see all of that huge buzz as critical peak hours. And so, yes, food is a really, really strong critical driver of activities in the night economy, and that's also because food is something that everyone can relate with. Not everyone can relate with alcohol, not everyone can relate with high-priced drinks, but you see food, everyone, irrespective of your price point as well, because also remember that on the larger side of the spectrum where you have the lounges and the bars, the price points come to play, all right, but for community bars, for lounges, for street lounges, food prices becomes a leveler, all right, such that irrespective of your earning power, you are able to afford something. So yes, right. Food is a huge driver.
So that slide is what drives spending. That's what we're looking at between food and alcohol there, and we're seeing food is getting the huge chunk there, not just alcohol. All right, let's move on now. One of your most interesting insights that people spend early but stay late.
Correct.
Talk to me about that.
So in terms of the spending patterns, we see that usually spending patterns peak from around 8 p.m.
Yes.
All right, at night. All right, so by 8 p.m. you begin to get a fair sense of what the pricing is going to look for, and that then has implications for the bar owners, around conversation around restocking, conversations around payment schedules, and just generally being able to stock up and prepare for another day, because it's a daily continuum, all right. And so we see that across board from about 8 p.m. the spending comes in up until around 12 midnight, all right, where it plateaus, all right. But then because there is that, recall that I've spoken about the sense of the familiar, where people do not go to these places alone. All right, and so that propensity that they would stay back and still have those conversations with their friends and their partners and their families then extends the wait time. So yes, we see spending begin to gradually move up from between 8 p.m. to about 12 midnight, but people then still linger on and have those conversations over food and drinks till about 2 a.m., 3 a.m. ish.
Right. So definitely, regardless of what's playing out, in the economy, it seems that nightlife, stays strong, regardless of inflation. I guess it's hedged against a lot of things.
Yeah. I mean, some of the anchors, the fact that there's a communal sense. All right. So even if you don't have money, laddie, chances are that if the three of us go out, all right, we're able to create buffers that allows you, who does not have money, to spend and cash in on the fun.
Right.
All right.
And you call the boys, say, boys, I don't have money tonight.
Correct.
But we still have to go out.
Correct. Even when you don't even make those calls, all right, just that sense of emotional intelligence where we are in a herd, all right, and we're all having fun. Everybody chips in, and just so that I mean, imagine then if you're the life of the party, man. We would not want to see you go.
Yeah.
And so everybody does chime in.
And sometimes there's always that one guy that pays for everybody.
Absolutely.
All right.
So yes.
So based on the data, what do you think Nigeria's nightlife economy would look like, say, in the next 3 to 5 years? Seeing what we've seen so far, 900 billion.
Yeah. Laddie, there was something that I thought was also very interesting, in the data point. When we did and I think we discussed it the last time I was here, where we spoke about the informal economy.
Right.
All right. Where you see that cash is still predominantly king. All right. And that's because of the sense
Even though you need a lot of naira right now to buy something.
True.
Cash is still
king. I mean, that was one of the things that we saw during the informal economy, that
right.
A lot of informal retailers still have a love for cash. But you see, when it comes to the nightlife economy, let you think about it. Last time you went out at night, when last did you spend cash? All right, on my right here, it just struck me that I haven't spent cash at night in the last 2-3 years. All right, and so we saw that relatively transfers dominate that space. All right, and then you then have card payment, and then cash is just relatively somewhere around the 10-20% mark. All right, I thought that was an interesting reversal of data, and it bears fidelity to actual currency, where you see that a lot of times, transfers and digital payments have become very pervasive. Also, I think that the security element does play a huge role, where you don't want to be carrying a lot of cash out at night because you don't want to get waylaid and all that, and so it becomes very easier to have digital payments facilitate transactions. But to your question around where the community nightlife especially can go in 5 years, I think that with the requisite investment, because part of also what we saw, power still remains a big challenge for a lot of the people who operate in the nightlife. I mean, they're going to need alternative sources. They need alternative sources of power to ensure that they can carry on with activities. All right. So I think that we requisite investment in power, with investments in security as well, where people are sure that if I go out, my life is safe, I would not come to harm. All right. I think that once we're able to get some of these buffers in place, I see us easily quadrupling, what we've done in the next 5 years.
All right. Definitely, we'll keep tracking that nightlife, and I'll see how I can also operate there, even though if I'm operating in the day economy.
Laddie, today is Friday, so you should.
Today is Friday. All right. We'll see. Bemigho Awala, thank you so much.
Always
Public and Media Relations Manager at Moniepoint Inc. Thank
Always
you.
A pleasure talking to you. Thank you.
All right, we'll take a break now. When we come back, we'll get a sense of what's played out in the Nigeria stock market for this week and what to expect for the next week. That's the moment. Stay with us. All right, let's review the trading week on Nigeria's stock market. Joining me now, we have Onome Owovorele, is an analyst there joining me via Zoom. Great to have you on the show, Onome.
Hi, Laddie. TGIF.
TGIF, yes, it's going good, and definitely investors in Nigeria's stock market, they're up again this week. If I put the week-to-date performance for the NGX up, we see month-to-date, there's also gains there, about 10.7% already in the month of April. That's huge. Week-to-date gains, 2.6%. Year-to-date, 43.2%, just Q1 into the few days of April there, most of the days of April. So talk to me about this trading week. What stood out for you?
Some of the earnings that came in, I think yesterday we had Q1 numbers from Boa Cement, Nigerian Breweries, Transcorp Hotels. So numbers have been quite good. And we're also seeing a rally in some of the mid-cap names, the likes of your Unilever Nigeria, UACN, for the last 2 days. They've also had strong gains. So it's been a good week so far. The earnings have been good. And that has kept the market in a bullish state.
Right, and definitely, it almost seems everything is working as a catalyst for upside moves for the NGX so far. Do you see any short-term correction, pullback?
I mean, yes and no. So the yes part of things, because the common debate people ask is this market overvalued? Remember, if you check the last 7 or 8 years, we had a year where the index went up by 70%. One of those years where we had a fix of the exchange rate. So at some point in time, I think there's going to be a pullback. We're expecting the Dangote refinery listing to be up, I'm sure, I guess, in a couple of months. When that happens, you're going to see funds exit some of these stocks that have run into that play. You have some of the insurance firms in the market at the moment raising money, capital via rights issues. If you have any of the bigger names. So at some point in time, I think you're going to see a pullback broadly in the market, and for the individual names that have outperformed the index, as people may decide to take profits at some point. So yes, we may see a pullback at some point.
Right, because I'm guessing some stocks already in Q1 are up over 100% so far. Some have done over 50%. As an investor that's trying to find a ride in this market, how do you get in? What's the strategy getting into a bull market?
I mean, first is that they have to realize that we're coming from a situation where a lot of the stocks were severely undervalued to a situation where many of the stocks are fairly valued. So anyone getting into the market and expecting maybe another 40-50% rally, that may not happen. But if you get into the market with a long-term mindset and you need to hold these stocks for the next 3 to 5 years, I think there's still room to run. And people also need to pay attention to fundamentals. There are still a few pockets of stocks here and there. If you look at the financial services space, you still have some of the tier 1 names that are trading below book value. If you look around the market, you still, even in the insurance side, you may have a few insurance companies trading below book value. So the opportunities for people need to have a longer term mindset, and people need to pay attention to fundamentals. If you're looking into it, if you have a timeline of 3, 4, 5 years, many of these stocks, even when you look at the banking names like your Zenith or GT, you look at some of the industrial names, just by the strength of earnings growth that we've seen, or historically the strength of earnings growth that these firms have had, if you forecast that they can maintain that earnings growth, you still have value that can be unlocked a few years down the line.
Right, and I know you track this market week in, week out. Talk to me about 3 stocks that you think are undervalued right now.
I mean, first I would say would be UBA. UBA is clearly undervalued because the book value for UBA should be in the 100 naira range, and UBA is still trading around 50 naira or so. So clearly UBA has some upside. Now that upside may not materialize in total over the next 1 year, but I'm sure with the banking space, capital raises and everything has been done, most of these banks have way cleaner books. So I think you have the likes of UBA, you have the likes of assets. I know investors seem to be a bit wary about assets, wondering, okay, we've had back-to-back acquisitions, can we see the value or not? But Access, remember, Access is probably the biggest bank in the country by asset size, and it's trading about half of its book value. So you still have pockets there. For the smaller cap stocks, you have the likes of Holden McCall. It's a penny stock, but it's in the real estate space. It's trading below book value. And in my view, I think for a lot of these companies in the real estate space, they are below book value, mainly because of conservative accounting techniques. So I think those are opportunities that people can pick on. With the bigger cap names, you have your likes of your Seplat. I know people might say Seplat is the most expensive stock at the moment, but if you take a 3, 4, 5 year view, where do you think Seplat should be? If you have Seplat growing its earnings at say 15-20% over the next 3-4 years, I won't be surprised if you see a Seplat at 15 to 20,000 naira in a couple of years. So even in the insurance space, many insurance companies are still quite undervalued. I know you might say the numbers can be a bit weak, growth can be weak, but with the recapitalization we've seen in the insurance space, I think moving forward, you're going to have bigger insurance firms that should deliver better results.
Okay, all right. I guess we'll keep tracking at this point. Most of these stocks are in overbought regions. We'll see if we'll get a pullback for most of them. Thank you so much, Onome Mohovoriole is an analyst, Green Ticker Tails. Thank you for coming on today.
Thank you for having me.
All right, we'll take a break down. When we come back, we got to check on what's happening in the global economy. That's in a moment. Just stay with us.
Thank you so much, Ladi. Welcome to the global news segment of the program. I'm Ini John McQuarrie. We start from the Persian Gulf nations. Of course, the Middle East war is having its impact as usual. It's been running for 14.5 million barrels below pre-war levels. That's the latest reports that we have from Goldman Sachs Group Incorporated, and estimated any resumption would take months. The region-wide total is 57% lower than before the outbreak of the Iran war. Analysts, including Dan Struven, say they shared this in April 23, and they said that a possible restoration would likely take a few months, and a scenario based on a full and safe reopening of the Strait of Hormuz and no renewed strikes. That's even what would take that much of time. Now, the World Bank has teamed up with Amazon.com Incorporated on a bond whose proceeds will go toward rehabilitating ecosystems in South Africa's Eastern Cape province. The $120 million 14-year bond, sold to large institutional investors, ties returns credits generated by restoring and degraded by centuries of overgrazing. Amazon has agreed to buy a large share of the credits, and the World Bank shared this, saying that in addition to the carbon-linked payment, the bond carries a 2.41% interest rate. We move to the United Kingdom, where retail sales unexpectedly bounced back in March, with the country's motorists rushing to forecourts to fill up on fuel as petrol prices surged in light of conflict in the Middle East. The volume of goods sold online and in stores rose 0.7%, and thus reversing a revised 0.6% decline in the previous month. This is according to the Office of National Statistics. The increase defied economists' expectations of a flat reading, yet the pound was just a little changed on Friday morning. In France, consumer confidence fell sharply in April, recording its largest drop since the start of the Ukraine war in 2022. The INSEE official statistics shared this today, and they said that the consumer confidence index dropped to 84 points from 89 points in March, and that's far below the 88 points expected on average by 15 economists polled by Reuters. Household perception of past inflation surged. The share of consumers reporting sharp price increases over the past year jumped 30 points, the largest monthly increase in more than 40 years, according to the reports. And now let's stop by in the United States and see how markets traded yesterday with our correspondent, Maria Bird.
The U.S. stock market tumbled on Thursday as the Dow Jones was down 0.4%. The S&P 500 was also down at 0.4% after coming off of a record-setting day on Wednesday. And the heavy-tech Nasdaq shed the greatest on the day at 0.9% down, as many investors were watching the stall between the U.S.-Iran peace talks, as the stalling in the peace talks has caused oil prices to go back up over $105 per barrel. We've also seen some challenges in the U.S. tech industry. These falling of stocks of IBM and ServiceNow has caused some great challenge in the U.S. stock market, as only time will tell how the market will respond in the weeks and days ahead.
Certainly, time will tell. I guess President Trump will also contribute to that. Also, let's move to Asia now, where Japanese consumer price index inflation rose more than expected in March, recovering from a 4-year low on higher energy costs, although core inflation still remained below the Bank of Japan's annual target. National CPI rose to 1.5% year-on-year in March from 1.3% in the prior month, recovering from its lowest level in nearly 4 months. Government figures showed this. National core CPI, which excludes volatile fresh food costs, rose 1.8% from 1.6%, also beating expectations of 1.7%. But the figure remains below the BOJ's 2% annual target for a second consecutive month. DeepSeek, today they released preview versions of their flagship open source artificial intelligence model V4, which is said features improved reasoning and performance capabilities. The company released 2 new models, DeepSeek V4 Pro and DeepSeek V4 Flash. The Pro version features 1.6 trillion parameters, while the Flash version is a smaller one, leaner model with 284 billion parameters. The company shared this in a post. Now we move to Turkey. The Turkish firm Yapı Merkezi Holdings is in talks with Kenya to electrify the East African nation's Chinese-built railway, enabling it to seamlessly link with a line under construction in neighboring Uganda. The upgrade would make the network compatible with the 2.7 billion euro electric railway the Istanbul-based firm is building from Kenya's border to Uganda's capital in Kampala. India's government is leaning on its refineries to survive an acute shortage of cooking gas as the war in Iran drags on, while also sourcing the world for additional supplies and nudging consumers towards alternatives. Still, with cargoes of liquefied petroleum gas trapped in the Persian Gulf, the country is yet to find enough supply to meet pre-crisis demand, exposing a major energy vulnerability and forcing prices up and pushing out some consumers entirely.
All right, thank you so much, Amy. Definitely, markets are buzzing right now. We see for the NGX up already 0.41%. Stocks getting attention. Zenith Bank, Access, and other Tier 2 banks. Bitcoin down, gold down, dollar index near flat, and global stocks mostly in the red. We'll give you more updates at 1:30. Thank you for watching Business Morning. I'm Ladi Williams. Bye-bye.